What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, I'm going to be covering the Chargepoint stock for you. And a lot of YouTubers can just go out there and, just tell you to buy a company. But what I'm going to do for you is I'm going to show you if this is a great buying opportunity or not. They just reported earnings. We're going to be covering the earnings. We're also going to be covering the competitors. And only if you feel this video gives you a better insight on the Chargepoint stock, be sure to subscribe to the channel. I'll be keeping you updated daily with a lot of the growth stocks and spec plays in the future. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, as we can see, Chargepoint is surging in the after hours. This is very rare, the past month or two on earnings reports. Pretty much every company has been selling off, okay? We're up around 12% in the after hours, so that is a very good sign. Pretty much the key to get a big raise in the after hours on an earnings report is guidance raise, and that's exactly what Chargepoint did. We're going to be taking a look into the company. Chargepoint reports second quarter fiscal 2022 financial results. We'll scroll down. Quarterly revenue increased 61% year over year. Full year revenue guidance raised 15% to 225 to 235 million. Guys, this is a very good sign that this company is the real deal for a SPAC stock. If we look at 2021 revenue right here, they were putting out on their investor presentation 198 million. So to jump that up to potentially $235 million, that means that they were underestimating their company. And that's what you want to look for in management. You don't want to look for management that is trying to manipulate investors into buying their stock. You want to see companies that are providing very accurate numbers on these investor presentations. And that's exactly what we're seeing with that guidance of, 235 million. It's a big raise from the investor presentation, a really good sign. Activated ports exceed 118,000 of July 31st, with over 5,400 in Europe and over 3,700 DC fast charger ports. Announced agreement to acquire European e-mobility technology provider, has to be an acquired e-bus and commercial vehicle management provider, City, I believe. So guys, we know that SPAC stocks in general have been beat up in 2021. I mean, the media completely demolished these stocks, saying that everything is speculation. And I do not believe that that is true, okay? Speculation, in my opinion, is when the revenue is not proven yet, okay? Any company, under, 50 million, 100 million in revenue, that's speculation to me. But when you're talking about companies in the $200, $400, $500 million revenue range, these are legit companies, okay? So in my opinion, SPAC stocks are one of the best investments right now, the ones that are really beat up if you can find, value. So I just went over that earnings report update for you, and you see they're acquiring companies and acquiring deals, and that's what a lot of people don't understand about these SPAC transactions, okay? They get a good inflow of cash once the deal, completes, and they had, $458 million cash to the balance sheet to play with. And that's exactly what they're doing, okay? Management is going out and acquiring companies, to grow their company and increase revenue even faster. So it looks like they're putting their money to work, expanding into Europe, acquiring smaller companies, and that's exactly what you want to do. So it looks like that deal they made with the City in Amsterdam was a great deal. If we scroll down, this will allow ChargePoint to add another 2,500 network ports and 3,500 connected vehicles to its growing portfolio. So now that we're aware, ChargePoint is, acquiring companies with their SPAC cash that they got, once the transaction closed. They're raising guidance. This is a strong EV charging company right now, in my personal opinion. And if we just take a look at the 1-year chart, we had a quadruple bottom at $20. Look at this. 1, 2, 3, 4, even 5 here. So guys, a quadruple bottom at the $20 range. In my opinion, this stock right now around $24 is getting a little bit expensive, just a little bit. We can see that their market cap is around 6.8 billion. And if we take that revenue projection for 2021, divide it, we get a 29x multiple, okay? So this is a growth stock, okay? So a 29x multiple is decent, but the thing is, for this company to double, you're going to be trading around, 60x multiple. So that's the thing. It's a little bit expensive right now, but as soon as the 2022 revenue comes around, the multiple will pull back significantly. So in my opinion, this is a buy, in the $20 to $25 range. An absolute, solid buy. under 20. But the thing is, that has really not happened. This stock has not touched, 18, $19, this past year. But if we look at some of the competitors, I'm telling you, if you compare, three of their other competitors, Blink, EVgo, Volta, those companies, in my opinion, really look like speculation when you compare, ChargePoint's numbers. We take a look at Blink Charging right here. It's trading around $33. Blink Charging, in the past 5, 6 years, look at their revenue, guys. They have not got anything going, 3 million, 3 million. 6 million. I believe this year they might hit around 15 million. I mean, when you're talking a company under $20 million, that is speculation in my opinion. I don't care what the valuation looks like. If it's cheap, if the market cap's tiny, that is speculation when you're betting on a company with $10, $15 million in revenue. Volta is trading around $9 right now. But if we look at Volta's investor presentation, it still looks like slight, speculation. A lot better than, Blink at this stage. So they're doing about 47 million in revenue this year, but next year it does beef up into the $141 million range. But if we go back to ChargePoint investor presentation, they're going to be doing some solid numbers next year. They might have to increase this investor presentation numbers, but they could be doing $400 million in my opinion for 2022. So as far as market leader right now, it does look like ChargePoint is far ahead, Blink and Volta. The last one we'll look at is EVgo, trading about $9. Market cap right now around 2 billion. And if we look at their revenue projections, 2020, 2021, 20 million, 2022, 54 million. It's still speculation in my opinion. Sure, the growth is good, but when you're talking about coming off of 20 million in revenue, this is a very, very, tiny company, 54 million in revenue. Blink, 20 million, EVgo under 100 million. These are speculation in my opinion still. So I believe right now ChargePoint is the strongest as far as market share. They have cash to acquire, other small businesses. So their revenue is actually going to grow substantially quicker than, their investor presentation guidance. Another cool thing to look at is their institutional ownership. And in my opinion, for an early stage growth stock, this actually has pretty good attention on, CNBC. Biden's always talking about EV, and it has, 32% ownership right now, which is very solid. A lot of these companies you see, just take off to the moon for 3 to 5 years. Their institutional ownership is usually around 50 to 60%. So, after, the pipe sell off, this company has a couple earnings reports now reported. It looks like, investors, big money hedge funds are going long on this stock. So I think this is a solid buy under $25. Right now, you had a big increase after hours, 13.6%. Because of that, yearly 2021 guidance raise. It would have been an amazing buy at the $20 range. But the thing is, if you're long-term on this company, 2 to 5 years, you're going to make a good profit on this one. We can also look at the tip ranks. The analysts are very bullish on this one for the long term. So analysts right now, have 8 buy ratings on the stock. So for a SPAC stock, this is getting massive coverage. I believe it's because Biden, the EV, the United States is trying to transform into that route for the next couple of years. They got deals out till 2030 with this infrastructure deal. So analysts are bullish, 68% upside on the stock. That is ridiculous upside. It would be overvalued in my opinion at that $35 range. The stock would be trading, like a 50x multiple for 2021. So a little bit expensive on the analyst side in my opinion. But, right now anything in the $20 to $25 range is a solid buy. I mean, this stock did see highs of, around $50. So you could easily see a double or a triple potentially in the next 1 to 2 years. This company is growing very fast. The revenue increase year over year was 66%. So, this is a solid buy in my opinion. So once again, I really hope you enjoyed the video. We covered the numbers, we covered the deals, we covered the valuation, competitors, market share and revenue. So, and only if you feel this video gave you better information on the ChargePoint stock as well as the EV charging sector, be sure to subscribe to the channel. I'll be keeping you updated with many other growth stocks in the future. There's going to be a lot of great information coming out. You don't want to miss it. I hope you have a great day.